All right, so this is JP. I'm here with my buddy here, Scott. We're going to talk about the lending process. Let's do the simplest, most easy thing first. Question that I get from everyone. How do I get approved?
Pre-approval process, pretty simple. Get in touch with the client, very easy. Have them connect with a link to fill out an online digital loan application, which captures all their information. Literally takes the clients 10 minutes to fill out an app online. From there, we create an account and a portal where we need to analyze their credit, their income, and their assets.
Those are the three things that are probably the most important things in order to get qualified for the loan?
Correct.
Does it matter how much they make? You say income, as in I have to make $40,000 to afford a home, or?
It depends what price that they're looking to buy it. So, depending on what price they're looking at, depending again, what their credit, not only what their credit score is, but also what kind of debt do they have.
Explain to me the credit score. I get that one a lot. People say, do I have good enough credit? And honestly, this is not my wheelhouse. This is why you're here. What should their credit score be? What could it be?
Typically for a conventional loan, you're gonna want a credit score of a 620 or better.
Okay.
However, there's the better credit score that you have. So let's say you have above a 720 or a 740. The better credit score you have, the better interest rate that you're going to qualify for. So credit does matter when it pertains to rate.
Got it.
Also when it pertains to qualifying for a loan. Again, if you're putting a low down payment and you have a lower credit score, there's a chance that we might not get you approved.
At all?
At all, correct.
Okay.
So credit does matter. Your credit score does play an integral part in qualifying, and also qualifying for the best rate. Not only qualifying for the loan itself, but getting the best rate on the open market.
So if I have a high credit score and I'm putting down, what is considered a high down payment to you?
A higher down payment may be 20% or more.
Okay.
I don't want to say our parents, but I think back when your standard down payment was 20%, and I think a lot of first-time home buyers and a lot of home buyers have the preconceived notion that a standard down payment for a home is 20%.
What's the average now?
I was just going to say, so in today's market, typically you're looking at a lot of people as a first-time home buyer might put down 5%.
Wow.
If you put down 10%, 10%, I think that's very common in today's marketplace.
Okay.
So you don't need 20% to buy a home these days.
Okay, got it.
That's not the standard anymore.
And then you said assets. What assets are we looking at?
We want to see between whether it's their checking account, savings account, 401k, stocks, their portfolio. What kind of assets do you have? Do you have enough money for the down payment? So if you're telling me you're putting 20% down,
you need to see it.
I need to see you got that 20%. Where's that coming from? I need to know. That's what we want to make sure, is that you have the funds for the down payment. And if there's closing costs involved, we got to make sure that the money's there for that.
Okay.
We're getting into, there's certain different loan products to where once you get into a certain loan product considered, let's say a jumbo loan.
Okay.
Which is a loan amount today, any loan amount above $647,200.
That qualifies into a different category.
Correct. Typically, you need a higher credit score to qualify. So instead of a 620, maybe a jumbo loan, you're going to need a 700 or a 720 minimum.
Got it.
And also, where a conventional loan, maybe the minimum down payment is 3 or 5%.
Okay.
Typically on a jumbo, you're going to want to put a minimum of 10% down. And then there's other factors that come into play. For example, again, when we're talking about assets, aside from your down payment and closing costs, most jumbo investors, they also want to see that maybe you have 6 months or 12 months mortgage payments in reserves.
Oh, wow.
So they want to know, besides what you have, God forbid anything were to happen.
Okay. So
if something were to happen, I've got money to make the mortgage payment for another 6 to 12 months.
So how does that differ from, you said, a conventional loan?
Yeah, so for conventional loan, outside of the down payment and closing costs, you really don't need any additional funds. They're not looking for what's called reserves. You can go down to your last penny and you're good.
Okay.
Where on jumbo loans, a lot of time, that's not the case.
And then there's another loan type I think I hear a lot of is FHA.
Correct.
How is that different?
So FHA is a great product because, one, minimum down payment, 3.5%.
Wow.
So a lower down payment.
Okay.
The other benefit of FHA is For credit score wise, to qualify, typically you only need a 580 credit score to qualify.
Okay.
Another benefit is with FHA, your qualifying ratios, so your total debt versus your total income. For FHA, those ratios can be higher. So
What's the ratio for FHA?
So for FHA, typically your max ratio is 57%.
What is it for conventional?
Conventional, your max is 50.
It's 50.
But typically you're going to want to keep it at about 45% or below.
45. Is there one for jumbo?
Typically is about 43% or below.
Got it.
So with jumbo loans, you need a higher credit score. You need a lower debt ratio.
More assets.
More assets to qualify. And they're a little more rigid on qualifying when it comes to your income and employment. It's a more rigorous underwriting process versus conventional or FHA. One thing that you definitely have to consider with FHA, especially here in Chicago, where it's a huge, we're a predominant condo market in the downtown area.
Yeah.
Right? So opposed to a lot of other cities in the country where 80% of the business may be condo business, for FHA, condos need to be FHA approved. And finding an FHA approved condo,
I'm guessing it's hard.
very challenging. It's almost like finding a needle in a haystack.
So what do condos have to do to get FHA approved? Like, is there certain standards? Is that something that you know, or?
Yes, so there's a whole basically application they've got to fill out that has to go to Department to FHA,
of housing,
that's Federal Housing Authority, to apply. There's fees that are involved. And typically, again, just most condo boards and condo associations, they just don't want to spend the money. They don't want to spend the time to have that, to go through that process. It's just not worth it for them.
So FHA, great product. It's just hard to find a home that lands up to it. What about single families in FHA?
Yeah, so single families, great.
Got it.
Again, single families, you don't need to be FHA approved. Any single family home qualifies. The other really important piece that comes in with FHA is for multi-unit properties.
Okay.
So 2, 3, and 4 unit properties. With FHA, you only need, same thing, you only need 3.5% down. Versus if you're buying a 2 to 4 unit conventional or jumbo, typically you're going to need at least 15 to 20% down at a minimum. FHA is crucial when buying multi-units because you could get a lower down payment.
So FHA for condos might not be the best. Single families works well, but multifamilies works the best.
Fantastic.
Got
A
it.
great product for multifamilies.
So it sounds like each one of these loan types kind of fits a certain type of not just buyer, but type of product.
Correct. The loan type will fit, again, type of buyer, type of product, type of property. So again, all depending.
Okay, so to get pre-approved, we're looking at debt to income ratio.
Correct.
We're looking at assets.
Correct.
And we're looking at income.
Correct.
Is that it?
We want to look at employment history.
Okay.
There's a lot of other nuances and variables, but those are our key components of what we're looking to qualify.
What are some nuances in employment history that you run across a lot? Like basically a W-2, 2 years sounds easy, right?
Yeah, so if you're, again, most standard, you're going to have a W-2 employee who they get a salary, maybe some type of bonus or commission structure on top of that where they get paid bi-weekly or bi-monthly. That's what we see most often. Typically, we want to see a 2-year history.
Okay.
Again, we've had some challenges in the past couple of years with COVID and people not having employment during specific times, and we're very understanding of that. When somebody's self-employed,
Okay.
for self-employed income, we want to make sure that you've been self-employed for 2 years. We want to see 2 years self-employed tax returns for the most part.
Okay.
So self-employed borrowers, it can get a little bit more challenging. And then people who are, let's say, hourly or seasonal. There's many different types of employment and income, but
you don't just have to have a normal W-2 2-year job. As long as you have proof of income, proof of employment, you can figure out each type of employment history that you need, right?
correct. Yes.
Got it. All right, man. This is a lot of good stuff. So we got employment history, debt to income ratio, we got assets, and we got credit score.
Correct.
Those are the top 4. What we got? What's next?
The other thing that, at least for us, for me, Scott Schneider, and my team,
Yeah.
guaranteed rate. One of the nice things that we do on the pre-approval process is we have what's called a power bid pre-approval.
Okay.
And what a power bid pre-approval is, we'll actually up front get your income docs. So we'll get W-2s or tax returns or pay stubs. We'll get assets. We'll get your bank statements or stock portfolio statements. And we'll have an underwriter review it all up front ahead of time to where we've basically gone through the entire underwriting phase as well. Therefore, when we'll give you a pre-approval, that's a power bid pre-approval, so it's an already underwritten pre-approval that basically all you need outside of getting your offer accepted is appraisal and title report.
Wow.
And if it's a condo, we get the condo warranty, but everything else is signed off on.
That pre-approval is a much stronger one than the average one.
Super strong.
Yeah, it's almost like cash.
Correct. It's basically as good as cash. So when you're in a competitive offer situation and you're going up against multiple offers, you're going up against cash buyers, this is as good. One, we're already approved. I can close any loan within 10 days. So
Wow.
you need a quick close, we got you covered.
Wow.
When a seller is deciphering between which offer should I take, if I've already taken out all of the questions and the probability of, hey, is this buyer really going to get approved once they go through the underwriting phase? I've taken all that out.
There's no guesswork there.
There's no guesswork.
So now, because I have a lot of clients that they get pre-approvals online, this is the difference from getting a pre-approval from Scott Schneiderman and getting a pre-approval online.
Online, with a lot of these just online companies that you can just put your information in and in 10 minutes it just spits out a pre-approval. We do all of our homework, legwork up front. And when you do these online pre-approvals, just for example, let's say somebody's self-employed, right? They put in for their income when they're doing their online application. They put in, I make $10,000 a month. That's what they're putting in, and their qualification and the pre-approval is based on that income. For somebody who's self-employed, we all know once I get a hold of that tax return and actually see their tax returns, listen, they might have grossed $120,000 over the year in revenue and sales, but after they write off expenses and marketing and any other deductions, their bottom line or their adjusted gross income,
That's their real number.
that's the real number. That's the number we're going to go off of. That might be 40 grand. So they might have this pre-approval letter that says, hey, I'm pre-approved for a place that's 500 or 600,000, but the second we actually see their tax returns, that might not be the case. So again, that's why you want to make sure you do your due diligence and your homework up front to know for sure.
Yeah. So what's your best advice for someone brand new, never bought a home before?
Yeah.
They say, hey, I need help. What's your number one advice? What's the best way to get things done the right way?
Best thing to do, one, again, you want to consult with somebody like yourself, your local realtor who knows the market, and then has these relationships with somebody like myself and my team. The client's going to come to me, and I'm going to do a full workup with that client to let them know, hey, based on your information, here's what you can qualify for. Not only one, from a maximum standpoint, but where are you comfortable for your monthly payment? You might qualify for a home that's $1 million, but do you necessarily want to spend that much? You might say, hey, I'm more comfortable with, when it comes down to my payment, I'm more comfortable with something in a much lower range. So we want to know what works for you, where are you comfortable, and giving the buyer enough information to understand what their buying power is, what they qualify for, and also establishing that relationship, especially in this market where rates are very volatile. 3 months ago, 4 months ago, if rates are in the low 4s and now they're in the high 6s, you need to have that relationship with your lender
To have that conversation.
To have that conversation and to get consistent market updates to understand that interest rate increase and or decrease, what does that do to my buying power?
And that's the difference between just typing in your information online, because they've never talked to you about that, and talking to an actual real person.
Correct. So it makes a big difference to have somebody who understands the market, who can guide you, hold your hand through the process, especially as a first-time home buyer.
Yeah.
It's a very daunting task. It's the biggest purchase you're ever going to make. So you need to make sure that somebody has your back, is giving you the proper information, the proper education, the knowledge that you need to proceed forward, especially in this market. So I'm sure you tell your buyers, just like I tell them, cheapest isn't always the best. You can go online and find Johnny's Mortgage Shop out of Mississippi, and maybe their overhead is so low that their lender fees are a couple $100 less, or the interest rate's 1/8% lower. But listen, if you're making this big of a purchase, it's not something you want to cheap out on.
Yeah.
You need somebody you can text, you can email, you can call, whether it's day, night, weekend.
Yep.
Somebody that's going to be able to communicate with you.
Yep.
And not just, hey, at 5 o'clock, doors closed, lights are off,
Yep.
and then on Fridays, going through Monday, especially over the weekend when most people are out looking.
Real estate happens on the weekend.
Correct.
Real estate happens
You
on the
need
weekends.
to have somebody to connect with.
Yeah, no.
You're not going to get that.
Yeah, I 100% agree. Like, that's the thing I think most first-time home buyers don't understand. It's the level of communication that makes the difference. I could do a whole nother video about stories of lenders and attorneys, and it's like, oh my Lord. You don't understand how this process can be because you don't do it every weekend.
You don't know what you don't know.
You don't know what you don't know. So like, if you do this every weekend, then you're like, okay, I'm gonna do it better next time. Right. You're gonna buy a home once every 3 years, 5 years, 10 years, and you don't know this is either the best experience possible or the worst experience possible. So like, Scott, thanks for your time, man. Appreciate it today. This was incredibly helpful.
And JP, same here, but kind of finalizing your point right there is, this is why you as the buyer needs to work with a trusted realtor and a trusted lender, because you don't know what you don't know. They know.
Yep.
And they're going to give you the proper guidance and expectations. Yep. So again, this is why you want to work with a team like ourselves.
I talk about the team all the time, and I always say the first person in the team is a lender. They need to understand how much you can afford, because I can show you $1 million homes, I can show you $100,000 homes. It doesn't matter if we don't know if you can afford it, don't know what it is.
Right.
So first part of the team, right here, lender, most important person.
Thanks,
Scott,
buddy.
Thanks a lot, man. Appreciate it.
JP, thanks again, buddy.